Alibaba's stock is rallying today as the CCP is looking to ease COVID restrictions, and that's what we're going to cover in this video. So guys, smash that like button, and if you're new to the channel, please consider subscribing. You're watching More Money, let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into it. So you can see here from this Barron's article that Alibaba is rallying after China moves to ease lockdown measures. And of course, you guys know that those COVID lockdowns is what caused the Chinese economy to really slow down. And it's something that I've really been railing against because China is the last major economy that has continued with these zero COVID protocols. Albeit, I understand that it's a different economy and not everybody's vaccinated at the levels that the other developed economies are. And going back here for a second, you can see that Alibaba's ticker in the Hong Kong listed exchanges surged 4.3%. Of course, the US exchanges are closed today due to Memorial Day. Now moving on, of course, Shanghai has been under lockdown since March, which has rattled global supply chains, stoked inflation, and led to a slowdown in the Chinese economy. But here's the thing that I want to really point out. A lot of investors are pushing the stock up right now with a lot of excitement, but I do agree with Jeffrey Halley, who's an analyst at Broker Onada. He said that the devil is in the detail, of course. It only takes a small breakthrough again for China's zero COVID policy to trigger more lockdowns. So be very cautious here. I encourage you guys to not get super excited here. See how this plays out. It could just be a up and a down, a backwards and a forwards type of thing. So we'll see how this rolls out. But there's other issues at play here because you have a slowing economy. You have merchants that are going out of business. How do you deal with those in a sort of reopening type situation? So you can see here that Alibaba's already thinking about this, and they're getting ready by offering 75 million in incentives for merchants in Shanghai. And so once the merchants resume operations as the city's month-long lockdowns wind down, they're going to be offering that $75 million incentive to merchants during the first 2 months after the lockdowns are lifted. So that's really good for Ali.me customers, but it also is really good for growing market share for Ali.me. Remember, they're falling behind Meituan, and so this might be a good strategy to sort of bring them back up there to a sort of competitive level territory. Now, what is the CCP doing? Well, you can see here that the CCP right now, thus far, at least as of May 24th, is offering limited relief to lockdown hit consumers. And so businesses struggling to cope with COVID lockdowns will receive some sort of relief. They're going to receive $21 billion of excess tax rebates and allow them to defer social insurance payments and loans. However, here's the problem. Support for consumers was restricted just to tax cuts on vehicle purchases and the deferment of some consumer and mortgage loans, and ensuring social benefits rose in line with price increases. I don't think that's enough. They're going to need some sort of US-style cash infusion into the hands of the consumers, especially in those lockdown territories, which effectively is the whole country. And I'm not the only one saying that. You can see here in the local newspapers that China is urged to give cash handouts as the economy and most vulnerable citizens are desperate for a lifeline right now. So it seems as though it's something that's being talked about, and we'll see what the CCP rolls out with. Now, as you can see here, here's a Hong Kong listed exchange security. It's up about 4.5% since the time that I recorded this video. And just from a valuation perspective, note guys that I will be revamping the model once the annual report is released. I want to get access on that additional disclosure, but I don't expect the valuation to change materially, which will likely fall in that $250 to $300 per share range. So based on the current share price, there's still strong upside for this company. But like I always say, Alibaba's not the only name in the game. There's 6 names of strong companies in the tracker that are trading under 50% of their intrinsic value. And note that there's 20 names of strong companies in the tracker trading near 50% of their intrinsic value. And once again, guys, I always say in every video, every single one of these trackers contains a link that takes you to a full detailed model for that security. So how do you get access to this? Well, you can get access to it at the lower tier level of the Patreon, and there's no risk to you, because if you decide within the first month that this is not for you, just let me know in Patreon and I'll fully refund your first month's money. So once again, zero risk for you. Now, the other thing that I do want to point out is that I'm currently in the process of putting out my 4-part Alibaba Q4 analysis series, and the final part will be the release of the updated model. And so in order to not miss out on that model, please take a second right now and hit that red subscribe button and ring that notification bell to be notified once that video is uploaded. And of course, if you've missed any of the Alibaba Q4 analysis videos, you can get to the latest video right here.